Well, we talked yesterday about FOMC being a binary event, and certainly that proved itself true yesterday. Big bullish day, very important price action on very high volume. So, what does that mean for today? Well, typical after a big up FOMC day, we usually get a little bit of a pullback. Let's take a look and see just what today shapes up to be. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:19 a.m. Central Time, and I am recording this in preparation for the market day of March the 19th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive right in, see what happened in our overnight markets. The broad markets for the U.S. futures indices were slightly down to scratch. NASDAQ was scratch. Dow was down just a little bit, as was the ES, or the, I should say, S&P 500 for those of you that are not futures traders. And the Russell was the weakest, about down 0.35. Let's see here. Crude oil down big, very big. Note that that's still quoting the old contract. Relative percent should still be the same. Tomorrow I'll be quoting the new contract, and most of my reports today actually came out quoting on the new contract. So crude oil did roll over, and most of the volume is now on the new contract. In terms of the euro, down about 0.5%. Kind of interesting. Pretty much went right back to where it started from before the FOMC. Bonds up slightly, about 0.25%, and gold also up just a tad. In overseas markets, we have China up marginally, Hong Kong up big, 1.45%, and then Japan down about a third, and then Europe slightly up, nothing really all that dramatic. In terms of macroeconomic reports for today, we have the usual Thursday players, unemployment claims. We do have the Philly Fed Manufacturing Index today. That's our red flag report, and certainly should be paid attention to as it occurs during the trading day. During tomorrow, there's really nothing to speak of. You do have an FOMC member speaking, and we'll call that an orange flag report, but nothing really to move anything in a major way tomorrow and what we would anticipate. In terms of volatility, obviously, yesterday was a big day. In fact, this right here, the Russell was up just below one standard deviation move. The other markets were all up over a standard deviation move. In terms of historical IV percentiles, you see we're down below the bottom third on all of them, and the Russell is just about as low as it goes at a 1 percentile. So very, very calm in terms of implied IV percentiles out there right now. So one of the things to read about that when you get very, very, very low numbers is that the only thing it could do is go up. So that's the thing that you kind of watch for, and look for signs of a squeeze in the VIX, look for signs of coiling action in your charts. After a big update like yesterday, we could very easily see some compression and digestion of that move. And then if we're going to truly be in an intermediate term bull market, we should see it start to slowly ebb its way back up and kind of carry through in a very patient way, to use the word of the week, a very patient way to carve out new highs. We wouldn't look for standard deviation up moves day after day after day. That would actually be unhealthy for a bull market. In the long term, what we would look for is incremental new highs. So that's kind of the expectation at this point if we are indeed to carry through with the intermediate term bullish trade. Daily report, you see the The crude oil, for you futures traders, you should be on the K contract, and it's well over 50% of volume at this point. We are still intermediate term phase opinion, phase 3, higher highs, higher lows. We do have a few flies in the ointment, still IBD status for our investor posture is still showing uptrend under pressure, though the GMI index actually has changed to a 6 out of 6. So it's all go there. Active trader market posture, bullish. And that's we'll get more details on that in just a second, but it is bullish across all 4 broad market indices now. From an investor position sizing opinion, currently still set at 50%. I suspect that this will go up in a day or two if we see any follow through on this big up move yesterday. From an active trader volatility based position sizing opinion, we are 75 to 100%. Market timing opinion today, neutral. Oftentimes after a big up FOMC day, you might actually be slightly bearish. Certainly look for signs of a choppiness or congestion day. Not that unusual following a move like that yesterday afternoon. 3-day outlook also neutral. Market posture for all 4 indices is now bullish, with the Russell at very bullish. So much healthier conditions here. We have reduced our threshold level on the hedge warning status to a 0 plus. It was a 1 yesterday. So we're calling this normal with elevated factors. We still have, 5 distribution days in both the S&P and the NASDAQ count. We still have the uptrend under pressure from the IBD status. We still have a recent lower low, and we have not yet gotten a higher high on our intermediate trend, though that's not true in the Russell. The Russell has put in a higher high. But on the most important one, the S&P 500, our most recent swings are for a lower low and not yet a higher high. So there are some concerns in the status. In terms of new highs, new lows, very bullish day yesterday, 395 new highs against 215 new lows, so that improved. We do have on the intermarket risk aversion indicators several that are still flagging as risk off, and the other 2 are probably best described as neutral. So again, several flies in the ointment. I very hesitantly dropped this from a 1 down to a threshold level 0 plus. I wouldn't be surprised if we get some weakness today. But clearly with the volume and the bullish action and the news that came out with the FOMC, the expectation really is that the risk levels have come down certainly a half notch, while we still have to recognize that there are these various warning signs that are still present. In our various opinions about option income strategies, VIX is inside the acceptable window, so certainly all clear to initiate new option income strategies. Covered calls, slightly bullish, still calling for an equal distribution between in the money and out of the money strikes. Put selling, any pullbacks, you are looking for opportunities to sell puts against a core portfolio basket of stocks that you are willing to own, using the position sizing that you are truly willing to take ownership of. In terms of some of our other charts, sector market posture, you see quite a bit more green here. Obviously yesterday healed a lot of damage, short, intermediate, and long term. Quite a bit more green. Consumer staples, energy, and materials being our weakest sectors still from a market posture standpoint. That's important to pay attention to. From a percent change, obviously big day, and you see energy was very much helped by the effect on the dollar yesterday. Also utilities. So these interest rate sensitive products, I think real estate had a big pop yesterday. Utilities had a big pop. Bonds and TLT had big pops. Everything that was related to interest rates and its impact on the dollar, all had very, very big reactions. Now on the flip side, Banks were somewhat, while it's still up, you see in a relative term, was the weakest sector yesterday. So banks probably were the loser in yesterday's announcements. And industry groups, retail number 1, railroads number 2, internet, biotech, healthcare, and transportation round out our top 6 industry groups, primary areas in which to focus. So as always, greatly appreciate you liking us. It's important that you not only share that you found this time valuable, but also it encourages me to keep making these things each morning. So I certainly appreciate you liking us on YouTube or your other favorite social media platform. As always, questions and support, Falcon Global, support at falconglobaltraders.com. More information at the website about any of our products, including our 3 live trading rooms and our Day Trader Daily Guide product. Disclaimers as always, hit the pause button if you need more time to read this. And then, greatly appreciate you each and every trading day in the Falcon Global Trading community. Looking forward to seeing you back here, same place, same time, tomorrow morning before the market.